What's going on, everyone? So we're going to do a little quick intraday video on Sofi. So Sofi stock, absolutely got obliterated off the open here. So SoFi technology stock sinking after Bloomberg released the fintech company's earnings, which weren't supposed to arrive until after the close. So SoFi reported a loss of 14 cents a share, meeting analyst forecast on sales 321 million ahead of the estimate of 284. Unfortunately for SoFi shareholders, SoFi now expects second quarter adjusted revenue between 330 million and 340 million, which is below estimates of 343.9. Forecast earnings before interest, taxes, depreciation of 100 million to 105 million, below estimates of 119. So let's just kind of take a look at the technicals here and see what exactly is going on with SoFi. And like like I mentioned in the beginning of this video, absolutely obliterated. Now, one thing we need to, because this is such like a almost like a cult like retail heavy favorite stock, right? It's got that good feeling. If we just kind of look back to what the history of the stock, highs of $28, big sweeping lows all the way down to that $14-15 area, big sweeping highs, which obviously is a lower high, $25, big sweeping lows back down to the 14, big sweeping highs back up to $24. So if you kind of look at what's going on here, highs, lower highs, and then absolute just destruction. So when we kind of get into what's exactly going on now here, if we look at the weekly time frame here, this is the weekly chart that we're taking a look at. Let's look at last week's lows followed by the previous week's lows of around $6. Okay, $6. This is below the weekly 5-day moving average, the weekly 10, the weekly 20. It's below every single macro level of support. So where are you kind of expecting the stock to go when you're below supply? This stock, this is not 2020 anymore, guys. A lot of you guys need to get over the fact of looking at, well, these stocks are super undervalued. Super undervalued to who? Because if they were that undervalued, they would not be this low. It has nothing to do with short sellers. It has nothing to do with, the suits or the hedge funds or none of that crap. The stock did not belong to be at $28 to begin with. The market will always correct a price back to where it should be. So if the stock never was meant to have a valuation that could solidify a $28, $25, $24, $20 stock price, then the market is going to put it back where it belongs. So because you think that it's too low, because you remember when the stock was trading at $20 or $28 or $24 or $15, just because you remember that does not mean that the stock belongs there. There's a big difference. And this is a big common problem with a lot of retail traders, is that you guys are so hard fixed on remembering what the stock price was and not actually, how much the stock deserves to be priced at. Now, do I think that SoFi needs to be $4? I don't know. Is a fair value play between 9 and 15? Maybe. And is the stock going to go to zero? Probably not. But the thing here is that if we're in a bear market across the board, where literally no stock or industry is safe at this point, and if they're pulling money out of stocks like Apple and Tesla and Amazon, stocks that have great revenue year over year and great growth year over year, then why do we think that some of these stocks that, earnings are still not the best, they're still in the growth stages, they're still early on in the development, why do we think that those stocks need to come back? Okay, if you're following anyone, especially people on YouTube, a lot of the big YouTubers, like with hundreds and hundreds of thousands of followers, that get into these smaller caps or these high growth stock names, right? I don't need to name any names. We all know the guys. We all know the YouTubers. It doesn't matter what you think the company is fair value at. It matters what the market thinks. Okay. There's obviously plenty of opportunities that you could have gotten out of this stock and saved a potential loss. You could have got out, when we lost the weekly 20, you could have got out when we lost the weekly 50-day moving average. You could have gotten out when we lost the weekly 200-day moving average. All of this would have potentially saved you from a lot of carnage. If you would have just got out at the last absolute stop here, if we see this trend line here, which is a 200-day moving average on the weekly time frame, If you would have just gotten out of this stock, you would have been able to gotten out right around $13. And if we just kind of look back to December of 2021, the stock has not been back over $13 since. So potentially for the first 5 months of the year, you would have saved yourself all of that loss. Now, instead of holding and averaging down here and averaging down here and averaging down here and then taking some more here, now look at what happens to the stock. Now it's crushed and you're down yet again. So even though you are a long-term investor, it is smart of you and anybody who's managing their own portfolio to do a little research on technical analysis. It will really, really help you save money and keep money in your pocket, and you'll also be able to hedge your positions. So for example, if you want to hold shares, you could hedge your position by taking 10, 15, 20 contracts short and tell yourself, well, until this stock starts closing over on a weekly time frame, closes over the 200-day moving average, I will just continue to hold these short positions on these options contracts and just take money all the way down to kind of hedge my position on the long side of things. And that would be a fair play to you, mate, because everything going on from the first 5 months of the year would have been making you money on a weekend in a month over month basis. So with that being said, if we kind of look at where the stock price is at now, $4.82, I don't have an area of support. There is no area on support on the weekly time frame. Obviously, we know when the stock opened up, it opened up at right around that $10 mark. So we're below we're below everything there. I mean, there's no support now. So what we would be looking for is the resistance, and where does the stock need to go? The stock needs to get back over $6. So until the stock gets back over $6, I would say stay away from it. Depending on, maybe your conviction is so high that you believe in this company for 5-10 years down the road, which I think you're probably going to be fine. Assuming that they don't, go out of business or anything, which, I don't think that they will. But assuming that, would it be smart to be averaging down here? It's tough to tell. You can take a little bit of a position. You can take a little bit of a nibbler down here at $4.82. But one thing that I do want you guys to kind of understand is that if you take a little bit of a nibbler down here at $4, right, $4.82 between $4 and $5, just expect the money to be locked up for 12 months. Let's just not expect, next month for it to be trading at 10, although it could. Let's not expect, 6 months down the road, we're back at 14, although it could. Let's just, give it 12 months. If you're really going to believe in the company and really going to invest for the long term, then you're going to need to give it that long term kind of wiggle, right? And, $4 and $5, is it fair value for the stock? Maybe, but will you be okay if the fair value for the stock is, let's say, between 3 and 9? So if this stock trades between $3 and $9 after this bear market and after this big correction is over with, if SoFi does come out of this and SoFi trades between a price of $3 and $10, is that okay for you? And is that worth it for you? If let's say it trades between $3 and $10 for the next 5, 6, 7 years, is that okay for you? If that is okay for you, then go ahead and take a nibbler. If you're looking for the stock to come back to 20, 25, 30, in the next 3 months, maybe this is not the right play for you. Maybe there's other plays out there that you can kind of, take part in. But like I said, under $6, you kind of want to stay away from. If you do want to hold this long term, you can take a little bit of a nibble down here, but let's not go selling the house and selling the wife and kids to try to buy in now because you think this is, the generational opportunity of a lifetime down here at $4. Just understand, and I'm not saying this, but just understand that there's a potential that the stock can trade between $4 and let's say $7 or $8 for the next 12 to 24 months. Are you going to be okay with that? If you're okay with that, go right ahead. If you're not okay with that and you're expecting some type of, big massive return within 3 months or 4 months or 2 months or 1 week, some people think that, I've seen some people that say, well, it's $4, I got to buy now. And they're expecting this thing to be at $10 next week. Let's not have those expectations. Let's be a little bit more smart with our money and let's manage our risk accordingly. If you guys enjoyed this technical analysis, real technical analysis, where, I'm not going to sugarcoat things and tell you guys just to continue to average down and buy and hold forever. Yes, history has proven to us that does work, but also there are companies like in the dot-com bubble that never came back, that once the market reset their price, they stayed and traded between a new range on their reset price. SoFi's reset price could be between $3 and $10, $3 and $12. Is that okay for you? And if that's okay for you, just understand that going in. Obviously not set in stone. Market can do whatever it wants. Market can go on, you know, some massive squeeze rally across all the indexes and across all stocks. And you can see a stock like Sofi go from 3 to 7 to 10 to 15 to 28 to 30, whatever, right? It can happen. We've seen it happen before, but just don't expect that. Have a little bit more of a realistic expectation when it comes to this stock. Currently trading at $4.87, down 18% on the day on those Bloomberg early release of the numbers. Hope this video helps you guys out. And I hope it kind of gives you a different perspective, right? Because so many YouTubers out there, you know, they just want to give you the feel good feeling, but we have to also be realistic. A lot of us who have been watching these stocks and you know, most of you guys who have been holding these stocks have been in some pain for, you know, over 12 months. So it's kind of like, you know, well, what should I be doing? Well, you know, if you're going to actively manage that position, you need to actively manage the position accordingly, and use your moving averages as levels of security and levels of, you know, kind of acceptance. Like when this lost its weekly 200 moving average here and started to really close below it, this is a big sign that, you know, maybe, you know, we have a bigger shift to come here, and from $13-14 all the way down to a low price of, you know, $4.82, you know, would have saved you $10 a share on this stock. So just also keep that in mind, because if you were up here, your average is in this zone here, you know, what's the harm in selling here and then just buying back when it reclaims this level for a next potential run up? Why did you want to sit through this down here? It doesn't really make sense to me. If your average is, let's say, $16, you know, why did you want to sit through, you know, a downturn like this? Why not just let this do its thing, and then when the market wants to fix itself, you could just get back in on the next run up, and then instead of having to wait through all of this drawdown, you can pretty much just catch the run up, which it was a lot faster as, when it comes to making profit. You know, but I understand some of you guys do want to average down on your position codes because you believe in it, but you can't just average down on every red day. You know, I know there's traders out there who, oh, you know, oh, SoFi is trading at 12. This is a great deal. Oh, you know what? It's trading at 10. You know, I need to buy this now. It's at 10. And then you're like, oh man, this thing's at $8. This is a great deal. And we're still talking about the same story down here at $4.82. So I hope that kind of makes sense. Subscribe to the YouTube channel. Give me a thumbs up, and I'll see you guys on the next one.